at this point in time. But to get a sense of what you should be doing from a trading perspective, we now have Dharmesh Shah of ICICI Direct now joining us. Mr. Shah, afternoon. Ashesha here. First up, your sense on the market, both Nifty and Bank Nifty, and the levels that we need to be watching out for.
So good afternoon. Absolutely, I think so. If you look at the Nifty for last few trading sessions, I think so. Nifty seems to be facing the selling pressure. I would say more for profit booking near the 200-day EMA, which is placed at around 24,373. Yes, in the near term, for last 8, 9 consecutive sessions, if you look, market seems to be facing some bit of a stiff resistance near the 200-day EMA. But some interesting point to highlight is if you look at the market for the medium term perspective, Nifty seems to be defending this 4 month rising upward trend line. I think so. This the value for the same is placed at around 24,000. So important level to be watched out in the near term will be 24,000 to 23,900. I think which we expect to hold in this current corrective phase. Yes, market seems to be more for stock specific right now. We are not seeing much of a action happening in the large caps, but mid caps, small caps seems to be relatively outperform in this current corrective phase. So yes, in the near term, some bit of a consolidation cannot be ruled out in this range of 24,000 to 24,400. But eventually, we expect for the month of September, market should eventually, I think, so see a gradual up move, and we should surpass the resistance of 24,600 and should be looking for a target of around 25,000 for the month of September. As far as Bank Nifty is concerned, yes, absolutely. I think so. Bank Nifty seems to be finding the strong support near the 200-day EMA, which was placed at around 56,800, 57,000. But eventually, I think so. We believe for Bank Nifty, I think so. The most heavyweights will be the HDFC Bank. Some bit of a stability is required there. Any stability from the HDFC Bank and some bit from the PSU Bank should lift the Bank Nifty towards 58,500 to 58,600. So overall, to conclude this from the market outlook, yes, any dip towards 23,800, 900 in Nifty should be looked as a buying opportunity for target of 24,600 from the short-term perspective.
Got that, Mr. Shah. Those were the levels on more of the benchmark indices. High and metal D'Souza here, by the way. But give us some sense on what sectors that you're looking to that are gaining traction or where you're seeing opportunity right now.
Yeah, so good afternoon, Manal. Absolutely, I think so. From the short term to talk from the sector perspective, I think so. Real estate sector as a whole has been clearly outperforming even in this current corrective phase. So we believe, I think so. Once the market sees some bit of a stability and the fall in the crude oil price augurs well from the inflation perspective, that overall looks to be proxy to play will be real estate sector as a whole. So real estate is something one which we like from the current levels, and where among the real estate our top pick remains to be DLF. Again, DLF Limited, if you look from the weekly perspective, the stock has been trading in this range of 678 to 640. Initially, we believe, I think so, the way the weekly formation seems to be forming for DLF looks for breakout above 685 and should be look for target from 732, keeping a stop loss of 632. So DLF inside the real estate space looks more positive from the current levels. Apart from real estate, again, metals as a space was not in limelight for a long time. I would say the sector has been into corrective phase for last 2 months, but some bit of a stability is clearly visible in metal space from the daily and weekly perspective. Among the metal space, again, steel stocks are something one which we like. Inside the steel stocks, again, sale remains to be a top pick. Again, in sale, if you look, I think so, there has been multiple occasions on the daily chart where the stock has been finding support near the 200-day EMA. At the same time, the falling trend line breakout supported by strong volumes indicating the end of corrective phase for sale. So sale is again which we like from the metal space for target from 209, keeping a stop loss of 184. So DLF and sale remains to be a top pick at the current market price.
Okay, so that's the word coming in on sale. But while we are talking about metal counters, Mr. Shah also wanted your thoughts on NMDC Steel. That stock is up 8.5%. There is no direct news piece pertaining to this. There is no fundamental news piece. But on the charts, how does the stock appear after the 8.5% move that we are seeing today?
Yes, actually, if you look at the overall metal space, I think so that's more exciting. I think so. Most of the stocks have done nothing for a long period of time, and they are coming from the long hibernation, consolidation, breakout. For NMDC Steel, again, the stock has been trading in this range of 39 to 42, 43 levels, and finally seems to be witnessing a breakout of those levels. We believe, I think so, from the short-term perspective, one can look for target from 47.5 to 48, keeping a stop loss of around 42. So NMDC Steel, yes, absolutely, I think so. long hibernation consolidation breakout happening for NMDC Steel looks positive from the short-term perspective.
Okay, Mr. Shah, thank you so much for taking us through all of those views and for taking the time to speak to us as well. But with